Like a quick market review video. Not going to take too much time, but earlier in the day this morning in pre-market, we noticed this range that we were creating, and typically when we see this, we see rounding from the top. That's typically indicative that we're going to get a flush down, and then we get that V reversal back up. That's just something that we were eyeballing, but again, just because we see some type of pattern in price doesn't mean that I'm just looking for shorts, because this could have easily just taken out these lows and then reversed higher. So I'm always looking for buys, but this typically happens because there's a large seller getting filled, and as he's getting filled, prices starting to push lower as market participants don't have as much thump to push through that seller that is sitting here in this range. So typically that's what happens. But again, we just keep it simple. We have our gamma exposure levels, and we let price in the market and what's going on. So early in the day, we checked some exposure levels. These are updated at the end of the day, but we did see increased buying at that 700 strike and 680. So it does look like more than likely, going into a push into the end of the year, that large buyers are confident that we're going to start trading up into those levels. Today, we had a really tight color between, it was like 670 and like 6 up to 680. But my immediate today was 675. It was the highest gamma strike. So that had a lot of interest and typically becomes sticky, and price is a magnet to it. But we have a large amount of gamma exposure at the 660 strike, 655, and 6. So that means that there was a lot more put buying and interest at those levels as well in the negative gamma exposure environment. When we did our pregame, prep at 9:10 this morning, we were right at the edge of being in a negative gamma environment. So we were long, we were positive gamma, but we were eyeballing the VIX, being that we got a new contract today. That gives us our new contango midpoint and what we call triple B. So when the October contract rolls over to the November contract, you just measure the distance from the last candle to the new candle on the open, and you measure that 50% point, and that's the contango midpoint. So when we're below this, that means we're in backwardation, and we're below triple B. So the price is going to be tighter and continue to trade higher, because below triple B, we're liquid. Above triple B, that means that we're illiquid, that buyers and sellers are further away in price. So it doesn't mean if you press buy that there's not going to be a seller. It just means that buyers and sellers are further away in price. So when we're above this line, we get more volatile moves, larger swings, right? When we are in environment, it'll be similar to this, where it's just tight consolidation, the dips get bought up, right? And it's just tighter price action. And we get that same thing, especially when we're in a low VIX environment and we're in a positive gamma environment. We're liquid, and that means that into buying, the dealers are selling, and into selling, that the dealers are buying to keep the market liquid. And that's how they hedge in a positive gamma environment. We're in a negative gamma environment, like we talked about, when we break the zero gamma level, which it started the day at 669, but when we got this consolidation, I noticed the gamma flip point moved up 70, and from 670 and lower, this was a negative gamma exposure environment, meaning that we're going to get dealers hedging with price. Above this, dealers are hedging against price. So when we're selling, they're buying it back up, and then into buying, they're selling. It's creating a liquid environment. So with that in mind, we had a pregame game plan. If we were to break down, it was at the time 669, but once the market opened and there was new open interest, the institutions and large buyers were hedging more to one side, but we were anticipating that 675 would be a sticky level or a magnet for price to go to. That was the largest gamma exposure strike. Once we opened, we started getting exposure at those low strikes, which obviously we traded down to today. So beforehand, we were just looking for buys to trade up into 675. And then if we were to break that, what ended up being the 670 level, not 669, we knew that we were going to have a momentum play to the downside, or we're looking, because I'm always looking for buys, I'm not necessarily looking for sells, unless that really makes sense. I was more looking for the support at the 660 and 665 strikes. And then if we were to get to 650 and 655, that was going to be basically our last line in the sand, which should be a strong area for a reversal. But if we were to get down there, that's even 665 was a pretty good sell. So that was my immediate support that we were looking for, was between 660 and 665 if we were to break that zero gamma level. And otherwise, we were just looking for buys to take it to the 675. So that was our pregame plan, keeping an eye on the VIX. And obviously with the VIX being above the midpoint, above triple B, we did get these large spikes. Price started selling off and into that negative gamma environment when we broke here at 10:30 this morning. We were consolidating. We were between the open and the previous day close. That's the open to gap. It's one of the most liquid points that price can be, is the previous day close and the open, and it just so happened to align with our 672 strike. So knowing that at open, I'm more looking for a break and retest, keeping the bullish mindset going into the day. But again, we just read price and go off whatever they want to do with the market. We got an idea based on where they're hedging is where price is going to be attracted to. But we were we're at a point where we were right on the edge. Obviously, we did end up breaking into it, but we even mentioned that in our pregame plan was that we were right on the edge. Things were, more fragile, that we could end up in a negative gamma environment and continue, the stuff we've been seeing. So we were not heavily positive. So that's literally right on the edge. I was basically zero gamma before. So anyways, we got that break into the zero gamma level. That's when we break the gamma environment. So anything below this point, we're in a negative gamma environment. That's why you see price a little bit tighter, more consolidating. That's where the dealers are hedging by selling. They're buying and selling, right? And then they are selling into buying. So they're going against price. When you break the when they start hedging with price. So they're going to accelerate the moves. So as you can see, the really large swings, right? Swings get bigger, so you got to size down. Just play with your bigger accounts, but again, be smart. But when we do this, it's great. I mean, you can get really big moves and take good, strong scalps, and price moves quicker, but it's just way more out of control. But that doesn't mean we don't have trades here. And even though selling pressure was stronger, watching the order flow and even the negative gamma and also the increasing gamma to the downside, I was still looking for buys, and I was just looking to get in and find a low to take price higher. So We had a couple today. I not actually, yeah, I had one at 10:59, which let's just see, I was eyeballing just the SPY levels, and I was buying on the ES futures, but 10:59. Oh, okay, yeah, it was right here. So I mentioned actually mentioned that before the trade, bottoming, looking to push with dying volume and reclaim. If not, we're going to drive lower if the volume sustains. Obviously, we're seeing a lot of sell pressure. So when I saw this bottoming here, we were getting activity on the order flow. So I was just looking for some type of basing going on, and we got that here. We had a negative gamma level. This was a way stronger gamma level, so price is going to be attracted to that. Plus, it's the zone, so price is going to be a magnet towards that, especially when we're close. So once I saw the bottoming, I was expecting a flush, and then for us to reverse back up, right? So once we took out this low, now I'm eyeballing for some type of sweep and reclaiming going on. So we got another we got a little base right here. Oops, sorry about that. Right? Base, and then we pushed higher, and then we traded lower, right? So it's just one candle, and it's just like a green doji, but that was just getting my eyes more, I'm eyeballing this, right? Instead of getting in too early, and it's like, oh, I'm gonna place my order above the high of this candle and trade it higher. Now you would have ended up in drawdown. So I would have just viciously just tap this level and continue to trade lower. So I was looking for that last flush with dying volume and then a reclaim. So if you were trading candlesticks, you would have waited for either this candle or this candle, which stop would have been, even if it was right there, 6.5 points. So I trade 2 minis. That would have been about $100 that you would have risked on that trade. On the trade I took, I was in right there on the close of that candle. I saw the push with dying volume. The volume was a lot higher in here. Actually, I can pull up the Bookmap if you guys want. This was at 10:40, right? 10:40. I can pull up the Bookmap for you guys if you want. Let's see if I can get this. My internet went out. That would have been bad, especially with the movement we had. But I'm pulling up the 10:40 right now, and I'll drag it over. 10. Okay, here we go. Oops. So let me do this. I have to minimize this. Sorry, guys. It's late again. Oops. I'm gonna put there blank and blank. So this was a pretty sizable trade. I got out right at the oops, why do I keep doing that? I got out at the flip. I think I saw this candle right here with the hammer with the wick, and I was like really hoping for a strong push, and then you saw this consolidation, and I was like, oh, I don't think we're gonna be trading higher. So I got out at like this red candle. I stopped below this one, and then once I got this doji, which I wasn't going off the candlestick, I was going off the order flow, but I'll show you what I was looking at. So this right here is 10:45. So yeah, right in here. Okay, cool. So this is about how zoomed in I have with the Bookmap. So we saw a larger order here, and then we had large sell volume, 1530 contracts, and then we had a little bit of die-in volume here, these 2 little nuggets below it, and then we had another 1234. And what I noticed was price wasn't really getting anywhere with this. So this was the 1044 right here, this candle. There's large selling in that. Does that look like a large selling candle to you? This candle's bigger, right? Just eyeballing it, right? That candle's bigger, but that candle had more volume in it right here, clearly, right? 1530. This had 1234. I mean, 300 contracts off, but this was a lot more compressed candle. This is a lot larger. What you see on those exhaustion pushes, you'll get these exhaustion drives before you get the move to the downside. This was obviously at close, but still, it's like larger thrust candle. It looks all good and bullish, and it's like, oh, I got faked out. But but you'll see that at the top of the range when you get that last push before it. It's a sign of capitulation. It's just like an exhaustive last move. It's where they make that last push. And like, okay, all the sellers or buyers are dried up, and then we're gonna move, back to the other side of the range. So we saw the large volume here. We saw it lessening here, a lot smaller, and then we had this increased volume, but it didn't get anywhere. Right when I got this next candle, that was like, that is not a continuation to the downside candle. And yeah, it could have ended up like this one, but since we had large volume, it was dying out. And then we got this close, and we're right hovering above this strike, and I was already anticipating the basing. I had my negative gamma levels, and I had my target. So since I already had the basing, I posted it in the Discord. I'm already eyeballing and looking for something to tell me to get in the trade and take it long. So once I saw this, it didn't get anywhere. And then I saw this dying out volume right when I saw this right here. 67.41. Oh, shoot, I'll go back to ES. 671. This was not growing. It's not even that it was green. It's just that it's small. Because if this was a small red one like this, like these little nuggets, I would have been like, oh yeah, this is exhausted. I'm out. You saw a large order was placed, causing the volume, right? Market selling into a limit order, right? Last push, limit order, large volume dying out, right? Actually, you know what? I do think I had this a little more zoomed out, or zoomed in, I mean. 95, and then you saw this 283. You got a little tiny bounce in here. You couldn't see that in the candle, really. I mean, you did. You had the range of the candle, but and then once went back to that low, and we had no volume, 61. I was like, okay, cool. We're taking this long. So that's when I put the trade on below the candle, and then I took it to. I actually got right out. I think it was because this is ES. My Trade of 8 deleted the the little arrows that you can see, but I put my stop below this candle, or like right there. Once I got that red candle, I closed it out because a lot of them I just did market order, and I closed out. So let's just say I just took it like right there. I got a couple more points, but that was a 1 to 6 trade today, just because we had our levels marked out. We knew what we were looking for, some exhaustion, and then we were looking to take it higher. I, of course, wanted this to trade higher. If we were going to flip back above into a positive gamma environment, I was really hoping, okay, cool, I saw this wick. It looked promising. I'm still holding the trade. I didn't just close it right when it tapped the level. And I was really hoping for continuation up to previous day close, 671 strike, and then ultimately to 675. With our highest gamma level this morning, which obviously that was one trade we took, and I actually did post that. I posted what I was here at 10:42, right? And then I'm trading this live. I'm not just like sitting here calling stuff out. I'm trading this live, so I'm not like dicking around on Discord like trying to type and all this stuff just to post. So obviously I posted that in hindsight, but or in fact I entered the trade, but I did mention what I was looking for, and then I got what I was looking for and entered the trade. And yeah, that was a solid. I didn't even know it was a 1 to 6, to be honest with you. I typically just look for 1 to 3s at least. So I was targeting. I actually do remember I marked out 1 to 3, and I was like, oh, I'll trade it back into the range and let's just see. But once we started getting this stronger push, and I was really eyeballing it, and I was okay with getting, some resistance here, because sometimes it's hard to push above these levels if we have this large selling with this buy order. If we don't get back up above it, we don't really support. We could flush back the downside. So I was being really careful in this area. Obviously, would have lowered my risk for sure. I probably would have only ended up with like a 1 to 1, just speed of price. But I just eyeballed it. I saw this wicking here, and I was just waiting for some type of high volume to come in and want to push price lower, and we didn't get it. So price continued up, and all the selling was pretty weak, and we just kept pushing and pushing. And then we saw the higher volume. High volume, price is slowing down, means we're running into some sellers and some resistance. Once you see this consolidation with, what do you know? Oops. Rounding, that's typically indicative of selling, is when we get rounding. Buying, sometimes we'll get these like large spikes, but you can even see, like this is more of a V, right, after the sweep. But what do you see here? Rounding. So it's not every time, but you get that rounded consolidation, and you got to be asking yourself, is this rounding from the top? It might be a push down coming. So we just eyeball that. Doesn't, I don't trade patterns and things like that, but just something I'm aware of. So I saw this and we weren't really getting much more momentum. I was like, okay, we're at this like turning point right here where we might start getting another flush to the downside. And what do you know? That sell volume came in. Once we broke this level, this strong candle, honestly, with this retail, whenever I short, I do not enter on longs. I will enter on a candle closure. We get that snap back, just like we teach. You get the snap back into the range, the reclaim of the level. It could even take it here. The closure with the wicks to the downside, you could have a pretty tight stop loss, like put it below this candle. That would have came close to getting you, but just to keep your risk versus reward good. Yeah, I could have taken this short, but I still was long biased to that 675 level. I kind of just had that in my head today, but I was just trading what I saw, and I was sticking with the plan, and it's just easy for me to be on one side of the market, just looking for buy opportunities. Anyways, if you love shorting and you see this consolidation and you break a negative like this with strong volume, which we got here, right? And then we had even stronger volume, hit this limit order, and you use that as that like little, we typically get like a pretty violent push. Like if I'm going to go short, I like to see not buying on the close. I like to see some type of push or drive to the upside, and then I'll short that. So if I have an area where I'd enter, basically what I do is I just think, okay, if my entry would be here, if I'm in a short, if I get an even better entry, right, all the better. So I just always think if I'm going to short the market, I want to get the best entry possible. With longs, you can get away with more because the market always goes up. It's always getting bought up. So inflation, it's always going to go up, right? So with buying, going long, you get punished less for being wrong or at different places, like we talked about in a previous video. With selling, you can get in big trouble if you sell at the wrong spot. So if I'm going to enter a trade short, I'm typically looking for some type of stronger bounce, and then once I get that bounce, then I'm shorting into that up move, and then we can take it lower. It tightens my stop, which is good, obviously, but then I'm in less drawdown and I'm not sweating it. And if I'm wrong, I'm wrong smaller. So anyways, could have taken it short. And then, once we broke that, we said 665 was our, downside target. And we got to another negative gamma level. I have them in light pink because they weren't as large negative gamma. But when we are around a large high gamma that is negative gamma, price likes to find the strike below and then start bouncing. So once I get a strike or two below a super high gamma level that is a negative level, I do look for an overshoot, but I'll look for it to overshoot one or two strikes, and then I can look for buys. So we got this strong flush, we got some bottoming, and then light sweep and reclaim. I typically like for it to be a stronger flush, but when you just look at it based on the gamma level, here at 668, you do get a good flush. I just like to see it a little bit lower than the low. Below it, but not getting too candlesticky. I'm looking at order flow, but just something I like to see is I like to see a strong body below the low and then a snap back. But we saw strong push, and then what do you see? Snap back into the range. Handle, right? That one right there. So snap back into the range. You can put your stop below that low. It's our capitulation indicator, and then could have traded it higher. I don't think I took that one. Actually, I did. And I remember thinking that this was going to be the move. I kept thinking, just based on the gamma exposure hedging that we had to the upside, I had that 675 strike in my head. But again, I have to trade, what's going on and what price will give me. I'm not out here trying to be right. I'm just looking to make money. So I do remember I took this trade. I'll just show you on SPY because it has the actual SPY level marked out. I saw this strong candle. I should have waited for the retest, but I really was looking for like a super large move today. I'll be honest, like up to that 675 target. And I bought today like the 1 to 2, and then I had the 1 to 3 was above the gamma flip. So being real careful. Once I got to 1 to 2, because my stop was bigger, I was like, I can just always look for like some retest. And actually what I did was on one of my accounts, and I don't do it with all my accounts because that's how you blow them. And, if you're wrong, it's better to, lessen you diversify your risk when you trade, multiple accounts separately, not all together. But if you have an A+ pivot, by all means hit them. But what I did on one of the accounts was, and I actually did, I got stopped out right below, I trailed the green candle. So I actually ended up with like a 1 to 6, I guess. One of the accounts I actually hit, I did get a better entry, but the majority, right when this candle closed, I hit like 2 or 3 of my accounts, and then the other ones I hit here. And I screenshot because I made like $3,500 on one of the accounts. And the reason being was I got on the trade here. I ended up in a little bit of drawdown. And then right when we got this closure above this 669 level, instead of me just jumping in, and then we get this like strong reversal down, just kind of like we did here. It wasn't immediate, but I was like, okay, since I'm already in trade in profit, I'll use some of my profit for the next push higher, and I can have on larger sides without ended up being in drawdown. I'm just using profit that I already have from my position. So once we got this red candle and I saw a wick, I'm just looking for a wick like right at or into the level, preferably. Kind of like this one where this wicked into the level and it snaps back and doesn't really want to go any lower. I just look for some type of wicking. Once I got this candle, it was good enough for me. It was close. I don't need like the extra 2 or 3 points. So I added my position here, and we got this push higher, and I'm like being real careful because I don't want this position up in drawdown, and I just trail to go higher. And once we swept this candle on here, I was out of the position. And it was another one I caught today, and then I didn't end up posting this one. Price was going crazy once we started getting these lower strikes, but I end up getting this push, and this one I was really holding to go higher, and it actually kind of fried me because I added to the position the same exact way on this trade as I did on the other one when I got this wick. So I had another entry here, and we got this consolidation. I started seeing rounding, and I was like, dude, I think I'm gonna hold it. I was up a lot. Like, I don't even want to say. I think I was up like another $3,000 on two separate accounts, and I hit it with a few of my other ones. But because instead of order flow was having a hard time. I was having a hard time with my order flow because my computer out of storage, so my internet or my computer was like freezing up. So you can see this gap here. Like, we did, like, price was like high velocity, which does do that, but I had a lot of gaps because my computer kept freezing and it was lagging. So I didn't really have order flow to help me. And I had the I had my order book. I'm watching price as we're down here, and I was like, I'm really looking for a high delta. My brain is just slowing down here, but a low delta to pop up 200 here. But I was really hoping I'd see like some strong negative or positive one, like a negative one, and price not pushing any lower, or we got some large positive delta, but didn't really get much. And 200s, but nothing like crazy. But that 95 was good. That was a good sign. Like, with all the selling we had going on, seeing that 256 was good in the 95. But I was having a hard time because it was wigging out. So, and when prices move like that, you definitely get a little bit more nervous. But that was 95. So right in here we had a larger delta, which I did see it, but I was a little scatterbrained and getting frustrated with the Bookmap. So what was it, 95, 25? Yeah, so it was like right there. Yeah, so once you see this, closing up above this, you can see it ends up being support. This happens all the time. So I know everyone's like, oh, support and resistance, like, and they go off candlesticks, but you can't see the orders. And earlier, when we got this flushing that happened, price traded right back up into what? This is on ES. This isn't even without using like strikes, which I think we did have one right there. Yeah, we did. 668, right at 668. Look where these wicks are touching. What do you know? It also aligns with order flow. I had a large delta at 67.38, which this is going to be a little bit different than what it was earlier today, because when price trades up into it, there might be more buying. Let me see here on the order book. It was 67.38, right? Yeah. This was a large, like this. It looked like this. But these obviously turned positive. We traded higher into these prices, and this from the whole day. But at the time when prices are in that range before we got the move higher, this was a large negative that we had. So when I see those, I'll just throw them on here, and then I'll look for resistance, and you can take trades. I just wasn't looking for I just wasn't looking for sells. I was just sticking with the bullish mindset. Obviously, some huge moves, or even like you know, pass some prop from accounts with it. Got another large delta here. What do you got? Price aggressively traded up into it. That's what we look for when you are taking shorts, and then immediately rejected. Once you start seeing that seller continue to sell, you see that delta grow or stay large, like where there's not buyers overtaking it. That's when you can enter short, and that can be your confirmation with a tight stop. But yeah, anyway, so in this bottoming here, you can see we have these larger sell orders. You can easily see it with the colors, but you got a lot of 100, sell orders in here, and you have a 532 larger volume these candles, but large volume 780. We're below large volume. Price likes to create volume and starts making me think, oh, I'm gonna, which is right at 141. So yeah, you get she's at 140, right? So where's 140? I just like showing you guys on Bookmap. Oh yeah, so this was large volume right here. One right there at the base. And what do you see? Little baby push, and then we push lower. But when you see the large volume, we like to get below it and then trade higher. So whenever you see large volume and you think, oh, maybe we're running into a bunch of buyers, right? We're getting this buying activity. Don't just jump in on the first sign of volume that you get, because we traded lower. This was pretty immediate, but we came back and we did a double sweep, right? Because when the dealers are hedging with price, they are going to continue to hedge until the last delta is hedged. So once we get a bounce, now we're like, okay, game on, green light is on. I'm not entering the trade now. I'm like, I am ready to go, and I know what I'm looking for. So we're looking for a strong push down, snap back into the range. You could wait for the reclaim of, we also had a daily low right here, which obviously, like, market was on a mission, a straight mission to, by the way, this humongous candle, look where it stopped. Like, to the penny. Isn't that crazy? This was a higher gamma level. This was a really high gamma level, the 665. But what we talked about earlier is in negative gamma, to the penny, which obviously you can see right here. We had that wick, and then we had a strong wick on the next part of the candle, but then it rejected. And it's the same exact pattern, if you want to call it that, is you get buying involved, and this all happens within like seconds, obviously, when you have these strong, violent candles with like news or Trump. You get that push up, and then you get that last push capitulation, and then that, or exhaustion, if you want to call it that, and you get a strong reclaim. This candle was freaking huge. So your stop would have been giant if you entered on this. I actually was in a trade with my own account. I put $500 into it, and I'm trying to do a 500 to 10, eventually 100 grand with it. So pray for me on that. But anyways, very large stop. I did think about it, but didn't really want to have a humongous stop. And I was like, whatever, if I miss the move, I missed the move. So get up into that delta that we had, that large seller, and push it lower. The dealers are going to hedge with price. So now we're like, okay, we're looking for some bottoming, and we're not really getting anywhere. We had some bottoming here. I got into a trade right here on this candle because I was watching the order flow. It 26. So let me show you 126. Oh yeah, here we go. You can see clearly larger volume, right? 485. Look at these little baby nuggets. No follow through. Got some limit orders. I was like, okay, once I saw these baby nuggets, below the higher volume, I took it long, and I was really hoping for, a strong drive. Didn't really get it. I saw the weekly gap level we have, which again, the gap open close of the week and the halfway point are support and resistances as well. If they land up with a gamma level, all the better. But I saw this candle right here, that wick touch it. Like if I was looking for a short, I would have been at large volume. What do you have? No follow through. And then you typically get that reversal move, and then you see the selling coming in. So unfortunately, didn't get a huge trade on that one, but made a few bucks on a few accounts. So that was cool. And then I got a trade, like I told you, I added right here. I don't remember. Yeah, I got that wick. So, ES candlesticks were a little different than SPY, but I got the wick on the level, and I was like, okay, cool. I'm going to take this higher. And then for a sweep here and a reclaim to push higher, but I mean, technically it did sweep it. We didn't have any other lows to sweep, but it traded back into that SPY level. So what I did was I got stopped out like right in here. Most of the positions were like pretty close to break even. It was like maybe 100 or 200 bucks, which is still good. And the banger trade of the day that obviously I wish I held, because I kept holding all my other ones, but I took my pre-workout and I was ready to go to the gym. I got in legitimately on that candle because on SPY, which I was watching that chart, I saw this here. I'm just showing you guys on Bookmap. And look at my freaking order flow. Oops. My Bookmap was tripping today, like it is right now. Anyways, my internet was wigging out today, so I was way less reliant on the Bookmap. I don't even know what's going on right now. Good grief. Oh, yeah. This just is airspace because I didn't have any internet. Right when I'm about to take a trade, I was in a position, got closed out, which also didn't make me very confident. I could have held and just left my stop below, but I was really not trying to get this push flush and take me out. And then we go trade to like 660, which I was starting to eyeball. So not on the order flow to look at, except on the order book. Like I didn't have a Bookmap, but I had the order book, and I didn't see any really large delta levels. So I used good old candlestick analysis. I saw the larger volume spike right here touching the level. Once I saw this wick and this candle closure, I was like, oh, I'm taking this thing long. If you're like, oh, okay, cool. That's the exhaustion candle, order block, whatever. And, like for people that trade candlestick analysis alone, like, that's free money right there. But anyways, once I saw this candle close with a wick, no closure below, I was like, okay, that looks like exhaustion to me. High volume candle. It was compressed. Look at the volume here on this candle. This candle right here, this large candle, you can see the volume is less than this candle, right? That one is a compressed candle. That is a large candle. There's no buying in there. Visually, I didn't have my Bookmap working for me, but you can see these things, even if you're not, using like order flow tools like that. And then what do? We sweep the high volume candle, and then we're also at literally a perfect gamma strike to the penny and below the highest gamma. So I know at least we're going to be attracted to that and hopefully violently run through it and reclaim it, which clearly we got here. Yes, you could have entered on this candle and put your stop below it, would have been a great trade. I ended up shutting out. I'm so sad. It grinded higher, but once we got this consolidation, I got this wick above the week, and I was like, oh, heck yeah, we're going to run it. And boink, got that large selling candle, and I was like, I don't want to deal with this. I'm out. Closed it out, and I got don't even have any idea. I just know it was really good. Risk versus reward, because that candle was tiny. Way better entering on that than like these large candles. But nonetheless, if you're making money, you're making money. I got out at the low of that candle. So that was another 1 to 6 trade. That's crazy. I honestly didn't even know that. But I knew it was small risk for large gain. So yeah, that was an awesome trading day, and I wanted to show you because I'm only watching SPY and ES. I wish I had my other monitor up. You know, it helps when instead of using NQ and QQQ, having those levels up, typically NASDAQ will trade off SPY levels really strong. Like as a proxy, you can trade NASDAQ off SPY levels as well. They typically react at the same pivots, but something I missed because I didn't have this up today was, I didn't have anything. Oh, wait, that was at 154. Oh, no, I didn't have DD bands there. That's today is DD bands, but who cares? Doesn't matter. Look where we reverse. I had my largest gamma exposure level, negative gamma exposure level, was 600, which that would have been added influence for the trade. And what do you see? I mean, I'm so sad. Honestly, I'm gonna find a way to use the order book, but also have my NASDAQ and the Qs up. I'm not worried about the NASDAQ, but having the Qs up levels as well, because I can also just flip over to NQ and throw those on. I like trading ES now solely because the Bookmap, I can see the orders way clearer. For some reason, the NASDAQ one does not look as clear. I'm probably stupid and screwed something up. I watched a bunch of videos but couldn't fix it. So I was like, I'm just going to trade SPY. It's all good. And if I want, I can follow the order flow on the S&P and I can trade NASDAQ with it too. I just haven't. But bottoming, right? We have some buying coming in. Bottom, sweep, immediate reclaim, boom. And also just like so you guys know, I have different risk management tools, but if you are doing candles, instead of putting it below the low, you could just put it below the candle that reclaimed, the range or whatever. Below the low is going to be safer because what if it wanted to come back and retap that level? It could have just tapped there and left the low alone. So, yeah, that was a sick move on that. And each strike is 40 points on so, I mean, obviously we got more, but golly. I mean, that was that's some chop in there. And these are 1 minute candles, but as I say, it immediately went, right to whatever. But even there was, dang, 2. Let's just say 2. That'd be, oh my gosh. I mean, that's over 100 points, like straight up. That's crazy money that you could make on that. But anyways, yeah. That was the review. Why can't I bring that over? Get it out of here. Okay. But anyways, that was the review off the gamma level today. We had that marked out before market even opened. You can see the accuracy is crazy. In a negative gamma environment, we're going to get these larger violent swings. If we're anticipating that, we're not caught off guard. And we can trade ideas around it. And instead of getting in here at the high, which again, you don't know if that's a high. It could have just been this and continued higher. But in a negative gamma environment, and on top of it, we have the VIX above BBB, plus it was skyrocketing today. you just wait for your pivot, wait for your best level. Don't rush to get into a trade. Your swings are larger, so your stops are going to have to be bigger. But since we're illiquid, that means price is going to touch everything. It's like a little kid running around. It's going to put its hands on literally everything that it possibly can. So there's no need to go and rush getting it. Wait for the strong push up to short it, or wait for the pullback to get long, right? The only ones that I jump in on is when we're at our strong level, we get that sweep and the immediate reclaim. A lot of more times than not, that reclaim, which you would prefer it to be a very strong thrust move up with the context of the gamma level and the last push and an immediate reclaim, that is where I'm okay with, getting in on that like candle closure situation where it might not be the best entry, but if order flow doesn't get me in and I want to wait, then I can do that. I just size down and just let price do what it needs to do. And you can always add to the position on the retest, but sometimes it'll just go and, then you're not a part of the move. So but that's how I've been trading. That's how I teach it. And that's just not based on anything I know. I learned like gamma exposure from Matt with Rocket Scooter, and then I did my own homework and research on this and how the dealers hedge and all that stuff. So then I just took how the dealers are going to hedge. I know the environment. I know what the price action is going to look like. And then I know what we're looking for, for the capitulation or the exhaustion that we get around these levels for these, strong moves up. So, and I don't need to be right and take this all the way to 675. Yeah, we might trade up to that tomorrow, but we might also trade lower into, I'll make this bigger, into that 60 strike again. Lower if we build any additional buying in this gamma exposure down here at like 650. That was pretty big. Like last week, we never got to it. I think we got to 665. We did 1014. That was a while ago. Yeah, we did. We got down to 655. I remember one of those days we did. We went past it like 2 strikes, I think. But anyways, that gamma exposure could grow at that level, meaning that people have in mind that we could have some more down. So I'm more looking at that gamma exposure growing at that 700 level, and 680 has been popping up, been growing, and we more have the volume just in this range right here. So I'm more looking, hey, how can I get in here to take this move up to 680 and 700, and also looking at the SPX where people hedged everything. What the heck's going on? 6,700. Holy guacamole. I haven't even looked at this. I don't know what this looked like earlier. Doesn't really look like we have a lot of hedging anywhere else. Let's take a peek. Typically, these are going to have more levels, but one of them in the morning. So let's look what the cues look like. Oh, yeah. I mean, look at the growing. Look at that 600, man, to the penny. Stuff's crazy. It's not even like, oh, just another trading model. It's like, it is the trading model. Everyone talks about the market makers and, the dealers. And it's like, if you know where they're going to act, why would you not use that information? That's just dumb to me. I feel like you're just going into the market blind, not to mention like with order flow. I just feel like if you're like a sniper on a mission, yeah, I mean, sure, you could scope and take somebody out, but imagine if you had night vision goggles and you're in a dark environment. It's like this. It's already hard enough to trade, but let alone like just trading candlesticks in these colors, and time frames don't change or mean anything. That just means what price did in the past within that allotted amount of time. Like, we want to predict where there's going to be volume, and then we want to have our model for what gets us to enter the trade, and then look for what we're targeting or what is a sign of us getting out. So anyways, that was a super long drawn out market review on the day, but I think this stuff's super cool and has been so unbelievably life-changing. Not to mention mixing with order flow, my stops are like way tighter. Not that it really matters, because if you win the trade, you make money. But I do think scale of things, and if you do want quicker, having a good risk reward without sacrificing win rate, that, you know, all the better. So I just feel like when you're in the market, you need all the tools you can get. Still, but you know, if you have more tools for the job, you have your, you know, your hammer and your nails and your screwdriver and your drill and all that. Like, why would you not use those tools to build the house? It's a lot harder just to do it with your hands with less tools, obviously. Hopefully that makes sense. I'm burnt out. But guys, and yeah, let me know if you guys need anything. Super cool. And happy to help with whatever you guys need. Peace.